Welcome to episode 9 of the Capital Compounder Show. Today we have a special guest who is the founder and CEO of Hypercharge Networks. That's Dave Bibby. Dave, thanks for coming on the show today.
Thanks, Robin. Happy to be here.
So you're basically powering and electrifying the future of Canada. But your start early on wasn't in this field at all. Let's just go back before Hypercharge Networks. Where did it all start? Your career.
Well, I've had a diverse career, which I think uniquely qualifies me to have been the founder of an EV charging company. I've always worked for large enterprises. I spent early in my career, I worked for a company that was putting PCs in all of our offices and deploying internet services. I worked in telecommunications, which was an amazing job, and I worked in the emerging business side of that company, large Canadian telco. And I worked in the emerging business side at a time when they made more money on payphones and long distance than they did on internet and mobility. So I'm dating myself a little bit here, but definitely where I was at was we really felt like we were creating the future telco. And now if you look at the way things are today, just look at how we're communicating today here online, and mobility and internet are the telcos of today. After that, I went into financial services for 15 years and learned a lot about how the economy works and how the whole financial services industry powers Canada. But at the time, they were a brick and mortar business, and now I work in a brokerage industry. Online trading is far bigger than any retail in branch. So I worked in banking. Banking was brick and mortar at one point. I worked on the mobility side. So always emerging business, always in the tech side of things. And then just prior to founding Hypercharge, I worked at the world's largest Caterpillar dealer, a company called Finning International, FTT, great Canadian company. And I was one of the co-founders of something called Finning Digital. Finning Digital was brought together by the executive team and the board to disrupt the heavy equipment industry. And we did that by connecting assets around the world, all the yellow equipment that you see on construction sites and in mines and everywhere else. And the whole play there was get the data off the machines so that we could lower our customers' operating costs and improve their performance. So lower their cost per whatever it was, cost per ton basically in mining. And that created more loyalty. So it was always about, and is always for me, about using technology to solve customer problems and improve productivity. And I've done it for a lot of very large companies, many of them publicly traded. And, but one of the key things that I always wanted to do is start, something from zero. I'd always helped these companies scale up or transform. I worked in, transformative areas of the business. And back in 2019, one weekend, my wife said she wanted to go test drive an EV. And we went down to the local dealer at the mall. So it wasn't a regular car company. I can just say that. Most people will know where it was. And basically bought that car on the spot. And it's really the only vehicle I've ever owned that got better after I bought it. And it did that because of all the software. Everything that we have in life today is software defined, whether it's vehicles or heavy equipment, anything. Software is the engine of the world, and the hardware becomes the vehicle for that. So that vehicle was in my garage and getting better every quarter as the software updates came along. But one of the biggest issues I had was the lack of reliable charging out there in the world. And I could see that, what we were doing with energy transition in mining and in oil and gas was really important. We needed critical minerals to create batteries and build cell phones and all those things, but we really don't need to burn fossil fuel at the rate we are. Quite frankly, we can't afford to. So, and the governments both all around the world, but primarily in the US and Canada here, where we do our business, are all in on electrification. And it's going to take a long time for that to happen, but I felt I could do my part by creating a company that would provide the infrastructure that would power this new industry. And so that's where Hypercharge was born.
So you bought the shiny new Tesla, right?
Mm-hmm. Yeah.
Without saying it, I could figure it
yeah.
out.
Yeah.
You completely fell in love with the EV car, but then you found, like a lot of other Canadians who own EV cars now, when they go on a road trip, there's range anxiety. They don't know exactly where they're going to charge their car next, right? Like, you can't just pull up to a gas station and there's conveniently going to be charging stations there on site also. So there still this very day, and I don't see a future even in 5 years where we're going to have the infrastructure built out. So that's the problem that Hypercharge is going to solve, basically, and contribute to. Is that right? The solution?
Exactly right. Yeah, I mean, it was really about providing reliable, easy to use charging solutions. And the other side of it is that with people that own EVs, they realize very quickly that you don't really go to a gas station or charge these cars in public very often if you could avoid it. You want to charge at home or at work while you're doing other things. And so range anxiety is a real thing, especially when we're going on long distances. So we need a mix of both public commercial charging and an abundance of private charging. And so for us, we went after multifamily with developers as our primary market, and now we're doing a lot more in the commercial side as well as those opportunities present themselves.
Yeah, so the idea was sparked, but then you co-founded the company from what I understand, right? Can you talk about that and the relationship and early beginnings?
Yeah, well, it's a very capital-intense business, really. So the key thing, like a lot of tech companies are starting from an idea, and they really need to prove out that idea and make sure they have the right product market fit, and then start to build from there. The thing that we very quickly realized was that we knew that there was a market for it, right? So by 2035, we want to have north of 60% of all new vehicles sold be zero emission. And, the dates shift a little bit here now, so I think they're even higher before, but we're sitting at around, in BC, we're probably around 20% of all new vehicles sold are zero emissions. Nationally, we're at about 12%, and that's from like 3% a few years ago. So it's just starting to move from early adopter to mass adoption. And so when I talk about product market fit, we knew the demand would be there. And so it was about, making sure that we could build a reliable solution that could scale and provide that service for customers.
And when you initially wrote that business plan, in the competitor section, who are the competitors then, and are they still your competitors now as you build out Hypercharge?
Yeah, it's a great question, and 100%. So we looked at ChargePoint's business model. I am a Tesla driver, so an owner, as I mentioned, and so Tesla's the gold standard, okay, and it's even proven out to be a competitive advantage for them to have the supercharging network that they invested in. They needed to invest in that early because otherwise they wouldn't have been able to sell cars. So it was sort of as important for them. Just think of the car companies in the early days. They needed the oil companies to put gas stations out there. Tesla needed to build out their own network of gas stations. The other OEMs all said, well, we've got gas-powered cars that are like 98, 99% of our vehicle sales are in gas cars. So they went a different route. They said, let's work with other providers like Hypercharge to build out that network. And so, like, when I looked at the business model itself, because that was before I decided to embark on it, I built a business plan, a business model. I looked at, some of the comps that were out there, like Blink and like ChargePoint in the US, and they both have quite different business models. Blink is a owner-operator model primarily, and ChargePoint is a resell and manage, much like us, so and do more with the software. And now 3+ years later, they all do everything. And yes, they're competitors. Blink not so much, they're not in Canada, but ChargePoint definitely is. And we compete very well with them. Every day we win business from them. But the market's growing too. It's not like it's competitive, yes, but there's growth opportunity for all here.
So it's not a winner-take-all market at
Right.
this early stage.
Yeah.
And so Tesla would be a direct competitor through their superchargers. Is that right?
No, I don't actually think so. I don't see them as first of all our chargers work with Teslas. That was from day one. We had to do that. So the Tesla supercharger network would be a competitor to like Electrify America or EVgo or anyone that's putting in their own network. But even still, they've been, I don't know if mandated or out of the altruistic goodness of their hearts decided to open their network up to all of the other car companies. So part of the thing that fuels our industry are government grants and incentives. And so those were early days. I think some of the grants, if you wanted to take advantage of those, you needed to be open to all. And ultimately, at the end of the day, I do think that there has to be interoperability between networks. And so we went, again, early days, we created something called Plug and Charge, which there was an industry term called Plug and Charge that is still yet to be rolled out. We created software that would allow for this interoperability to reduce customer friction. We just wanted to make it simple for people to get their vehicle charged. And you're going to see a lot more of that coming in the next year. I'm very excited about that because, we have a great app. Every charging company has their own app. But as a consumer, most consumers, I don't think they want another app. Our iPhones are littered with apps. And what you want is to be able to pull up and charge your vehicle instantly and not have to download an app and reload a wallet and all of that, which is sort of how that works today.
ChargePoint especially, right? I have the ChargePoint app, and that's exactly how it works. Yeah.
Yeah. So we're doing a lot more with contactless now, with payment card readers. We're working on just some AI that will allow us, if you're in a parkade, we can tell that's your vehicle and we can make the handshake and create the payment directly there. And the industry itself is working on some, we call them roaming agreements and things like that. So that this is all going to improve customer experience over the next year.
And so while Tesla is not a direct competitor to Hypercharge, you would agree that ChargePoint is. So when ChargePoint and yourself, Hypercharge, are going up and bidding, what differentiates Hypercharge versus the ChargePoint offer?
Well, there's a few things that differentiate us. First of all, ChargePoint is a hardware manufacturer primarily. So they can only sell the products that ChargePoint manufactures today. And the same as Flow is a great Canadian company. They have their own hardware. Blink has their own hardware. So all these hardware manufacturers have to continue to develop and innovate, and they have huge supply chains and high costs to manufacture these products. We can take advantage of any of the hardware that's available in the market. And so to give you an example, we sell everything from the smallest level 2 charger that you would put in your single family home all the way up to the fastest supercharger that you would use in a fleet or commercial setting. And in the last 3 years, the innovation has just gone through the roof. Speeds have gotten greater, costs have come down. New things, like one of the biggest challenges is the lack of infrastructure availability with the utilities. So now what we're doing is integrating batteries into the mix here. So if you'd asked me 2 years ago, did we need that? We didn't need it then. We didn't know we needed it, and now we know we need it. So the big thing for us is that when we realized that there was a good market opportunity there, we went out and sourced a few different options in that market for what's called the battery buffered charging, where ChargePoint doesn't have that, Blink doesn't have that, Flow doesn't have that. And we were able to go to market with that in under sort of 90 days. So just that whole innovation. And then also from a margins point of view, we have some of the highest, if not the highest, industry margins, especially in the level 2 space, because we're able to take advantage of a few different suppliers in the market.
So a benefit of your business model, there's no cost outlays to constantly be innovating products, right? To stay ahead of the market. Those cost outlays are placed on your supplier, right? So you launched in, was it 2019, I believe, or was it officially 2020?
It was actually 2021.
21, okay.
When we started it was in June of 21, yeah.
Okay, and who was the first major contract that you land, and how did you land the contract?
Yeah, so the startup was 21, mid-21, and the official launch of the platform was in probably spring of 2022. So it was recruit the team, build the platform, get it all going, and then our first customers started to come in the mid part of 2022. And we started small, really, with a number of parking companies in the east and a couple of different hospitality organizations out west. It's humble beginnings.
How do you sell the idea to, parking lot, hospitality? Is there revenue sharing? Is there something in it for these companies to install the charging stations themselves?
Yeah. So it depends on the segment. Okay. So, but when we work with developers, that's our biggest segment. When they're building new buildings, there are codes, new municipal codes that require them to install EV chargers, a certain percentage depending on where they are. So they'll work with a company like ours to put in the infrastructure, and then once the build's complete, work with the homeowner association or strata to take over the management of that. So what's in it for them is, they, first of all, we're now pre-selling as part of a pre-sale package in many of those cases, like you pick your fridge and your granite and things like that. In our case, you can tick a box and add a managed EV charger into your parking space. And most people that are buying a new condo want a charger in their space, even if they don't own an EV today, because they may not have one yet, but their next car will be. So they'll add it there. So there's no rev share in that case, but we'll take basically the charger and manage it for them on behalf of the strata.
Okay. Obviously, it's a selling point for someone who wants to move into a new condo or townhouse complex, and there's already charging stations there. But there are revenue sharing opportunities, I assume, for some categories. And so you mentioned you work with developers, and so what are some of the big developers in Canada that you are working with, that you're installing stations in their developments?
Yeah, so some of the biggest developers, if you kind of looked at our customer portfolio over the last year, the number of developers that we're now working with has increased significantly. So out west, we work with Bosa Properties. On the prairies, we're working with Devereaux. Back in your neck of the woods, Mattamy Homes, so Canada's largest
GTA. Yeah,
you bet. PCI Developments, Metropia, Diamond Kilmer, Camrose Felcorp. Like the list of people we work with is very extensive now. Just about everyone, and the ones that we're not yet working with, we're certainly working towards working with them.
Yeah, so there's the developer category. There's public as well. So there's like REITs, for example, right? Like companies that own malls and plazas. And so what's the penetration like there so far?
Yeah, I mean, it's starting to grow. One of our biggest partners is, we have a number of parking companies that we work with that will manage those lots on behalf of the REITs. And so we work with Precise Park. It's a big partner out in Toronto as well. They manage lots all around North America and work with REITs quite frequently. And that's where, rev sharing does come into play, especially when we're talking about high power charging in those public locations. In many cases, one of the other areas, revenue generating opportunities, certainly in BC, but all across Canada, is a low carbon fuel standard. So last fall we introduced a carbon credit program where we can generate credits through kilowatt hours dispensed through our chargers, and depending on the jurisdiction, we will monetize those. So the west coast of North America all have carbon credit programs. Canada itself has one as well, and depending on where it is, we can rev share that back with the customer.
And then I believe the third big market for Hypercharge would be fleets, right? So can you give some examples of some of those clients that you're installing stations in and servicing?
Yeah, so there's a couple that I can't mention, but they're very large, and we're seeing a lot more growth in that space. But in the trucking world, in the courier world, even in the utility space, there's a number of fleet operators that are now electrifying their fleet. So we're working with basically anyone who has a large fleet of light to medium duty vehicles. They have a different use case. So they want generally a bit higher powered chargers to make sure that their fleets are ready and available the next day. So if they're returned to base, let's call it, those guys are customers of ours. And like 2 years ago, there wasn't any, the F-150 Lightning didn't really exist yet. It was a concept car. And so now you're starting to see, Chevrolet and Ford all shipping these vehicles. And so all of those companies that are, sort of larger, have larger fleets are starting to look at putting in their own private charging networks for their fleets. And then the other side of that is where we're doing a return to home fleet. So this is where sometimes drivers will bring the cars back to their home, and we'll put chargers in their houses and actually then make sure that the employee is not paying for the energy that for the company vehicle. And so our software can handle all of that. So I think the main thing to note, I know earlier we were talking about the hardware side. Where we do spend our research and development, our innovation dollars, is actually on the software side, creating solutions for fleet as an example, or for condos, to make sure that we can manage their use case effectively.
Let's get more into how Hypercharge makes money. So there's the installation of the electric charging stations. Then there's the software that you just hit on. And then there's the servicing component. Can you just walk us through each of the revenue generating aspects of each?
Yeah, for sure. So there's two models that customers will acquire services from us. There's a direct purchase where we sell hardware and then we manage it. So that today is making up the bulk of our business. We have also introduced something called charging as a service, where we'll put up the CapEx and put in all of the infrastructure at our cost, and then earn the revenue back through utilization. And that's where we own and operate that. So as we move forward, we'll be doing a lot more of that business in the right locations. So we've learned so much over the last 3 years about where it makes sense for us to own and operate these chargers versus where it makes more sense for our customers to own and operate. But everything we sell, we've got hardware, so good margin on selling hardware or leasing it. Software is a great recurring revenue stream. As I mentioned as well, carbon credits, we generate some incremental revenue that way. And then finally, services, which we've launched. We've always been doing the services, but we did it in a fairly, we didn't really do it in a commercial sense. We did it because we needed to. And we do work with a number of electrical contractors and other installers. So we were sort of very careful about not taking away from their business because they introduce a lot of business to us. We have over 60 partners right now that go out and sell our products and services. However, when it comes to aftermarket support, making sure these things are available, the high-powered chargers do need a fair bit of attention on an ongoing basis. So we can do all that work as well.
And what about bigger strategic partnerships? Like I'm thinking about the other publicly traded company, Hammond Power Solutions, who build out the transformers that make your product basically possible, right? To further build up the infrastructure and be able to handle the electric load. Do you have any large strategic partnerships that you can talk to?
Well, that's one of the key things we're exploring right now is how do we move from startup to scale up? So I really think we're poised to do that today. And if you look at our last couple quarters here, we spent a lot of energy in the last year pivoting to profitability. We're not quite there yet, but we're really close. And so we're sort of, as a small company, you're always sort of, I feel like we're one foot on the gas, one on the clutch in a way. Not that EVs have clutches. It's all go or not. But yeah, so we think that there's going to be opportunity for strategic M&A, really. But we do, today we're partnering with our hardware providers. So sometimes we introduce business to them. Well, often we do. Sometimes they bring it to us. And our parking company partners. There's a channel to market. Those guys really help us a lot because they have the relationships with a lot of our customers. And one of them contacted me recently and said, "Hey, Dave, I'm really kind of getting tired of seeing you in our customers' parking lots. Let's have a conversation." And so that's how that started. Even though we were already on friendly terms, but it was like people want to see you execute. And we've really done a great job of that, according to some of our customers, many of them, and the partners as well.
So your vision for the future, Dave. Obviously, there's going to be more electric cars on the roads. There's a 2035 mandate, right? I think it's 60% of cars sold need to have an electric component. But then you also mentioned, and I'm fully aware, there is the Electrify America, basically electric station, much like a gas station that you can stop into in the U.S. I don't think we have anything like it yet in Canada. But if we look out to 2035, what's your vision of the future of infrastructure in Canada? So when you want to charge your car, what will it be like in 2035?
Well, basically, like today, we're sitting at about 500,000 EVs on the road. By 2030, that's going to grow to 5 million.
In Canada.
And then, this is just in Canada. And then by 2040, it's 21 million. Every one of those vehicles needs an EV charger. Or if there's two in a house, then they could share one. But we'll require almost 700,000 public charging stations. These are public, not
700,000 in Canada by
yeah,
2035.
correct. Correct.
How many
So
are there currently in Canada?
today we're sort of somewhere around maybe 40,000 in that range. So and essentially, like, there's 1.6 million parking spots in Canada that require chargers by 2030. So the market opportunity for us is incredibly huge. It's
Out
huge.
of the
And
700,000, sorry.
yeah, go ahead. No, please.
Out of the 700,000 charging stations, how many do you envision Hypercharge basically owning and operating out of the 700,000?
I mean, it's a tough question to answer, but we're going after the 1.2 million that are needed in the multifamily homes, and I would love to own more than 10% of those. 25 would be great. Our whole mission. This is just in Canada alone. We're currently in 8 provinces and we're in 13 states. So the U.S. expansion opportunity is even bigger for us. So I think that, essentially, as I said, about one foot on the clutch and one on the gas, it's a capital intense business. So our next goal, we've sold 5,000 stations today. Well, closer to 4,500 currently, but on track for the 5,000 as well. Our next goal is really to get to 20,000, and for us, it's about, as I mentioned, about the customers that we have, being able to provide that customer experience for them. Every one of those customers is continuing to develop new projects, and we're starting to see a lot of recurring, repeat business from those developers. So I see no reason why, as a company, our goal is to be a $50 million company by 2026, and we're just basically going to double every year, and I think we can do that every 12 to 18 months over the next 3 years. It's huge growth.
And what's your goal as a percentage of revenue that you want to achieve annual recurring revenue?
Well, and the neat thing about that is, as we get to scale, that shifts from the initial sale to the 20,000. For me, is where we become self-sufficient through our own recurring revenue. So we don't have to sell more hardware to just maintain our OPEX. And ultimately, that number can fluctuate depending on the product mix, but that's really the goal there, is for us to get to that level of scale. So all EV charging companies have been beaten down big time this year in terms of share price performance. And if you look at Blink or ChargePoint or any of the publicly traded comps, they're all kind of racing to get to profitability. I think we'll be first, quite frankly. And I mean, we're obviously not at the scale of those companies, but just the way we operate is very lean, very efficient. And as I said before, we don't have the supply chain and the innovation costs that those companies have to maintain. We're able to pivot very quickly. And then the future of the company, though, really isn't just about EV charging. It's about energy management. So when we look at the types of things that are going on in multifamily homes, there's a lot more demand for electricity in those buildings. And so our software and our hardware, whether it's solar, battery, EV charging, all of that needs to be managed and can be load shared. We can triage how much demand is required on the grid by using storage. So I really think for us, it's going to become more of an energy management story than just strictly an EV charging story.
And your vision, where looking out 10 to 15 years, people will be able to charge more conveniently when they're at the mall, right? When they're parked in their parking space, there's going to be maybe your electric station they can charge at. They don't have to go out of their way to stop off at a gas station. which might require a detour. What does that mean for a company like Alimentation Couche-Tard then? Like, will they be able to adapt to the electrification of Canada and the infrastructure?
Yeah, I mean, their business isn't strictly about gas, or refueling. That does create the need to go there, but people still need to stop at a convenience store to get things. So I don't think it's that their business is going anywhere. I think one of the challenges that they will have though is they've got a lot of real estate and their costs, so they're going to have to find a way to offset those costs. And I would be more concerned if I was just purely not a convenience store player, but an oil company, about what's going to happen in the future there for their refueling business. And we're talking 10 to 20 years out, but the time for them to be planning that is today, because electrification is happening, and we can all debate how quickly it's going to happen, but consumer behavior is changing. And I rarely go to a gas station anymore, so that's lost opportunity for them. So they'll need to pivot their business into something else.
Absolutely. So that for alimentation, that means that people aren't walking to the store and buying chips and chocolate bar and Monster energy drink, right? They're not stopping as much.
Well, those guys are putting in EV chargers today, though, right? So that's
okay, so
they're already after it. Yeah.
And so who are they partnering with to install those chargers?
I'm not sure. I think they have a number of partners that they work with, and but so we work with a number of the partners that I know Suncor uses as an example, where we work with the same companies that Suncor works with, and we are doing some work with the energy companies. Would love to do more. I think that would be a great space for us to do a lot more with. And one of the nice things about our software is it's all completely white labelable, so we can build networks for those companies and manage them on their behalf. So that's something that we're looking at. And then beyond that,
the part about the business, right? It's the software and the ability for analytics to manage the entire network. Because for a fleet company, that means thousands upon thousands of trucks, right?
Absolutely. And they don't, that's just not core to their business, right? They're running whatever operation they have. They just want to make sure the vehicles are able to get where they need to go. And so we do a bunch of work with fleet telematics companies as well to integrate those into our platform, and then we can help them plan their routes. We can make sure that they have proper accounting and remittance and carbon credits and all those things. So that's a whole other area of our business that we're helping those companies electrify, make it simple and make it work for them.
And let's talk about your path to profitability. How do you get there? Do you have a projection as to when you become EBITDA positive as a start?
We have a path to get there, definitely. Kind of a little bit reluctant to give any guidance. It's always a challenge, but we're going very quickly towards that right now. So in the last 2 quarters, we've taken a bunch of cost out of our business as well, over 25%. At the same time, we've grown our revenue and our backlog significantly as well. So we kind of focus on those things, on a regular basis. So, but we want to grow too as well. We want to continue to innovate. So it's always that trade-off between growth and profit. But we're very focused today on profitability.
And you mentioned that I think I saw online that you started off in Texas. Is that right? That was the first state that you entered when you penetrated the U.S. market. Was it?
I think
Texas?
it was actually New Jersey.
New Jersey
was the first one, but we're in Texas and we're in New Jersey, and we're in 11 other states as well now. it's thin, like we're just getting started, but it's a high priority for us in 2025. And we went through the whole California CTEP certification so that we're authorized to sell product and manage them to their standards, which they have some of the highest standards in the world. And so we now have CTEP certification on a number of our products, which is great. So that will help us scale into that market.
In terms of competitive dynamics and other dynamics, tell me about the differences between Canada and the U.S. and selling into the different geographies.
Well, Canada's our home base. We're
Yeah.
here, and we have an office in Toronto and one in Vancouver. So people like that. They like you to be where they are. And it makes sense, right? Like we all want to do business with people we can shake hands with, and it's still like that in this world. And so I think Canada's also very forward in terms of EV adoption, Quebec and BC especially, but Ontario is catching up. Like they're way behind BC and Ontario, but now on just a pure numbers basis, they'll eclipse for sure BC next year if they haven't already, and then beyond there. So we're very excited about Ontario. Now the U.S. is a little bit, it's vast. So we did a bunch of research to say where in the U.S. specifically would we like to be? Where is it most likely that we can add value and we can win? So we've got a playbook for the U.S. That we're just starting to roll out here, but we'll see. I mean, it's the other way to go in the U.S. is to scale up through acquisition. So there's a few companies out there that would be interesting to connect with.
So there's possible M&A in the future if there are synergies. Is Hypercharge Networks the only publicly traded electric charging station company on the TSX currently?
To my knowledge, we are. I don't follow it that closely, but I know when we IPO'd, for sure we were, and I believe we still are. So that's one of the unique ways that investors can get involved in the sector.
And for potential investors who might be watching this, what are some things that most people might not understand, they might misunderstand about the business that is a hurdle for them to basically look further into Hypercharge?
Well, I think the biggest hurdle in this industry is it went through such a spike back in 21 and 2, is typical hype cycle. And I've seen these happen, all of us have seen them happen, and whether it was crypto, whether it was the internet, mobile, any of it, right? It all goes through early phase hype and then it comes down. And now I think now is the time to be looking at a company like Hypercharge as an investor. There's huge upside. This industry is not going anywhere. It's just starting to scale up. And I think that's the key thing, is just, watch what we do and watch what we say. And we've been hitting all our marks from revenue generation, from a growth point of view. And ultimately, our business model is really good, and it's starting to scale. Ultimately, the customers are starting to reward us with more. The other thing I didn't mention is we have over 20,000 drivers on our app. That's growing by 1,000 a month right now. So that's an incredible growth.
Are those the fleets basically who are signed up? And
those are end users that use our chargers. So
okay.
And we publish that on our website. And I look at it and I'm blown away by, it started going very slowly like this, and then it just started to take off. It started to grow, by about 1,000 a month over the last 6 months. And it will continue to grow.
20,000 active users on the app.
Yeah.
And these are companies, these are just, people with a Tesla basically who are registered on the app and locating chargers and...
Yeah, they're EV drivers that are using our products to recharge their cars.
And then for people curious, can viewers just go on to the Apple store or the Android store now and download Hypercharge and try it out, have a look?
You bet. Yeah.
Yep.
You'll see a map of all our chargers, and the other thing we're doing is building a huge backlog. So I think we announced last quarter, so we had our highest revenue quarter. It was $1.4 million in that quarter, but our backlog grew to $8.7 million. At the same time, as I mentioned, we reduced our OPEX by 25%. And that backlog is going to convert in the next year, I'll just say, and we're continuing to add to it. So the company's performance has never been better, and I don't know, fortunately or unfortunately, our share price has never been lower. So I think it creates a unique opportunity.
Is there institutional ownership currently of Hypercharge?
There is, yeah.
And could you go into a little bit more about that and which institutions hold the stock?
I can't really go into detail on that, but there are some institutions. We have two that are involved with us and have continued to support us as we go, which is great. They were early on and continue to help out. But it's they know that the space is going to grow, and it's ultimately a question of like how quickly does it happen. So yeah, it's been
with over $8 million in backlog. You're obviously going to have to scale the team itself. So what's your strategy there in scaling the company and keeping up with the growth and demand that comes?
Well, I'm not sure we have to. We've proven, like in the last quarter, we delivered our best quarter ever in terms of deliveries. I think there was over 650 stations delivered in a single quarter, which was a record for us. So sure, at some point we will have to add people, but we're adding them in sales and marketing more so than operations and back office.
Yep.
Keeping it lean.
Yeah, exactly. Is there anything that we didn't touch on that we left off the table, Dave, that you want to bring up for the future, your vision for the company?
I think ultimately, the key summary here is that the electrification is happening. That the industry will evolve, and we're evolving very quickly with it, and we're leading it in many ways. Like as I talked about, moving from an EV charging company to an energy management company, and looking at things like batteries and storage along the way. It's all software powered. We have the platform and the people that are building that. If you look at our customers, the list of who's who on our customers, they're some of the best companies in Canada. And by best, I mean they're the biggest, and they put us through a lot of paces. They wouldn't do business with us if they didn't know we were able to execute on it. So, we're just keeping our heads down and moving forward and growing as a company here. So
that's wonderful. Well, thanks for the conversation, Dave. Really appreciate it.
Thanks, Robin. Yeah, real pleasure.